Good afternoon, ladies and gentlemen, and welcome to our 6-minute video series. My name is Joe Metz, and this series is about where 6 minutes can save you hundreds of thousands of dollars on your capital gains tax. It's the perfect retirement solution for landlords, and it helps you avoid or minimize capital gains tax on your personal residence or rentals. So, the topic today is, can you avoid the capital gains tax on your personal residence? The quick answer is yes. And for example, if your house is currently worth $3 million or more, and you've owned it a long time, let's say you bought it in the 60s or the 70s, which is so often the case for many of my clients, your tax can easily amount to $1 million or more. But here's the good news. You can totally avoid it. So, before I show you how you can avoid the tax, just a little bit about us. You may know us from the monthly newsletter that we send out, the Senior Homeowner Times. Some of the books that we've written, The Best Cities in the West, Senior Housing Simplified, and Help at Home. And to subscribe to the newsletter to receive a free copy of any of our books, just call that number there or email us at that email address. And don't forget, there's tons of resources for you on our website, which is seniorhomeownersolutions.com. And if you'd like to get a copy of our latest book called Avoid the Capital Gains Tax, then just call that number there. So before I get into the strategy, I want to just say that all the materials that I'm providing today, all the information, is educational in nature only. Please consult your own professionals before engaging in any of the strategies that we're going to be talking about here today. So, if you sold your house, what would your tax be? Well, this is really a question for your CPA to answer, but here's a way you can kind of estimate it. One way is to go to smartasset.com, of course, verify with your own CPA. But let's say you paid $50,000 for your house way back in 1968 or so. And now the house is worth $3 million. And let's say that your annual income is about $120,000 and your filing status is married. Your federal tax rate would be 23.8%. For a tax of $673,500, there's a big owie there. But then the state has its hands out too. They want 15.63%, or a tax of $413,465, and there you have it, a $1,086,000 tax that you would pay if you sold your house. So let's talk about some ways to have your cake and eat it too. And not pay that $1 million check. Don't write that $1 million check to the IRS. Okay, number one is very simple. You just keep your house until you pass away. Once you die, your basis is stepped up to the value at the time of your death. Your heirs take over the property, and if they decide to sell it, there's no tax owed at that time. The cons are that you may need to move. You may need to sell your house. Then what do you do? Well, here's my favorite strategy: is exchange your home for an income property or a REIT, a real estate investment trust. And a lot of you are probably saying, Joe, you can't do an exchange on a personal residence. I understand that, but let's dig a little further here. So you keep your income property. Once you trade into your income property or your REIT until you pass away, your cost basis is stepped up, and voila, again, no capital gains tax is owed. Your income is likely to double or more if you own residential rentals in the Bay Area, like in San Mateo or Santa Clara County. You're only getting about half the rent that you would get in a commercial property or in a REIT. So the disadvantage is that you have to convert your home into a rental for a period of time so that it qualifies for the 1031 exchange. But the good news is that we handle all of it for you. We have the team that can get your house ready to rent and get it rented to a good short-term tenant. When I say short-term, I mean a year or so. And we handle all of that for you at no extra cost. So the 1031 exchange is the vehicle by which we do this. And the advantages of a 1031 exchange is that you can defer all of your gain, resulting in no tax at the time of your sale. The disadvantage is, if it's your personal residence, you can't do it, but you can. See, it only works for investment property. So if it's your personal residence, you'd have to rent it out for a period of time to qualify it as a rental property. The time to do that varies between CPA, one CPA and another, but 2 tax returns is one guide that a lot of CPAs are talking about. But that could be a matter of 2 months. I mean, you could have income in December and income in January, and there's 2 tax returns. I'd say a year minimum would probably be a safer bet. You have to pay tax on any cash that you take out, right? If you do a 1031 exchange and you want to pull some cash out, then you have to pay tax on it, except for your 250K or your 500K exclusion if it's a house that you've lived in for 2 out of the last 5 years. The good news here again is we handle all of this for you. There's a lot of moving parts. It's not super complicated. It's not simple either, but we do every step for you. So what do you get in exchange for your house? What are you going to be owning for the rest of your life? Well, it's your call. I mean, like I said earlier, you could keep your existing house, and you could keep your existing house and rent it out and have the kids manage it. But there's some disadvantages to that. And the big one is the income and the lack of diversity. So what I recommend is institutional grade, investment grade properties like a Chase Bank or Starbucks Coffee, or many others that are out there that you own and control all by yourself. You don't have to worry about when the group is going to sell or when they're going to refi or whatever. When you own a investment grade property all by yourself, you get to sell it when you want. Of course, you pay the tax if it's while you're still alive, and you get to refinance it whenever you want. Now, if you refinance it, then that money is yours, tax-free. Has to be repaid, of course, but that money is yours tax-free. Now, another option is a REIT. And this is a very, it's a kind of an involved process. We take care of all of it for you. But basically what you wind up with is a large investment property or a group of properties that you own a small but tradable interest in. So what's a REIT? A REIT is a real estate investment trust. That's a pool of income generating real estate investments. The benefit of exchanging equity for REIT shares, one, you get to diversify your real estate. Instead of having all of your eggs tied up in one property, you can spread them out over a long period of time. Your income is usually going to double over a single family rental that you might have. There's 0 property management responsibilities, or capabilities. You can't even vote on most things. It's all up to the general partner or the organizer of the REIT. Of course, there's 0 capital gains tax unless you sell any shares, and your shares are liquidable. But any that you sell are taxable until your basis is stepped up, and they wouldn't be taxable to your heirs or your kids if they inherit your property. Strategy number 3, invest in a triple net commercial property, and that should really say a absolute triple net commercial property. There is a distinction. And the advantages of owning an absolute triple net commercial property are, number 1, no more property management, no more tenant turnovers. They're long leases, usually 10 years or more. There's no maintenance or repairs. And you're going to have a steady, long-term, reliable income guaranteed by some of the best companies in the U.S. No capital gains tax to pay. and you're going to double or more your rental property income in most cases. So there you have it. There's a little bit about the strategies that are kind of the super simplified Reader's Digest version. And I want to thank you for watching the video today. I know it's a lot. There is a lot to absorb in all of this, and you probably have questions. Feel free to call. There's a number that you can call me at, or go to that email address, shoot us an email, and we're happy to answer any of your questions. These weekly series will continue next week, week 7. The topic is going to be why commercial property and what kind is best. So tune in for that on December 4th, Wednesday, December 4th at 5 o'clock. We will email you the link about 30 minutes before the start. If you have any difficulty, there's the number to call. So where are we going with this weekly series? Well, what I'm doing is I'm drilling in on the parts and pieces of the strategies that will enable you to live wherever you want to live, move whenever you want, totally avoid the capital gains tax, boost your monthly income dramatically for the rest of your life, often double or more, and rid yourself of the 3 T's: tenants, toilets, and turnovers. I should say problem tenants, because of course you'll have a tenant in your commercial property, but it's going to be a institutional grade tenant, high credit tenant, and on a long lease, so that you can enjoy your golden years free of financial stress. But let's say you just want to tune into the whole thing. You want the whole enchilada right now. You don't want to take it week by week. We call that the whole enchilada, and we do an overall presentation on the retirement solution for landlords. If you own rentals, this is a great retirement solution for you. And avoiding the capital gains tax on your personal residence. We call it the whole enchilada, and our next one is on Tuesday, December 10th at 5 o'clock. Don't confuse that one with our weekly series. This is on Tuesday, December 10th at 5 p.m. for the whole enchilada. It's going to be about a 30 to 40-minute presentation. And to register for that, there's the number to call, or shoot us an email there, info@seniorhomeownersolutions.com. Any questions? Hey, we're happy to answer them. Allow us 24 hours to reply. But shoot them to joe@seniorhomeownersolutions.com, and I'll get to them as soon as I can, and certainly within 24 hours. I want to thank you for your time today. Have a happy Thanksgiving. In the meanwhile, if you'd like to talk to me about your own capital gains tax situation and a solution for it, then call that number right there, 650-758-0319. Thank you, folks, and see you next week.